Is inflation a hurdle to interest rate cuts? Good morning and welcome to Morning Markets. UK inflation unexpectedly rose to 3.6% in June and the core measure rose to 3.7%. Sticky inflation in the UK is inhibiting the Bank of England's capacity to respond to the weakening labour market with interest rate cuts. Across the Atlantic, yesterday's US inflation report showed core inflation still just below 3%. That marks a significant drop from the 6.6% peak reached in the autumn of 2022, but it's still above the Fed's target, and it's noticeable that the pace of decline has slowed in recent months. Why then is Donald Trump putting pressure on Chair Powell to cut interest rates? There are several reasons. Tariffs are a tax on consumers and companies, and lower interest rates would soften the blow. Early evidence suggests that the impact of tariffs on inflation has not been as great as feared, with companies absorbing most of the increase in costs. However, it's probably too early to conclude that the effect won't still be felt, and that's why the Fed is being understandably cautious. The cost of servicing US government debt is approaching 4% of GDP. If interest rates were lowered and investors believed that interest rates would remain low, then that would reduce the cost of servicing that debt. The Treasury is already skewing issuance towards shorter dated bills, and lowering the interest rate would reduce the cost of issuing this debt. Government debt has increased significantly, while household and company debt has fallen over the last decade. As a result, the impact of higher interest rates is higher interest payments from the government to households and companies. Some economists argue that this is inflationary. Although investors instinctively bristle at a tax on the independence of the central bank, they do expect interest rates to be cut over the next year by 1%. Thank you for listening.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.